Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from American Waterworks Company, but don't worry, it's not as dull as tap water. We're going to see if their financial health is crystal clear or a bit murky. In this video, we're breaking down their latest filing with the SEC, which includes the results of their annual shareholder meeting and a peek at their financial strategy in Kentucky. We'll see who got elected, how executives are getting paid, and what a rate request in Kentucky could mean for the company's future. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below. Come join us. Let's kick things off with the results from their annual meeting held in May. It seems like the big event was on May 14, 2025, where shareholders got to vote on important stuff like who sits on the board of directors and how much the top executives get paid. Almost 90% of shares were represented, meaning there was pretty good engagement. First up, electing directors, shareholders voted on 8 nominees to sit on the board. Now, these board members will be around until the next annual meeting in 2026, steering the ship for American Water. Let's check the numbers. For Jeffrey Edwards, we see about 153 million votes for, roughly 8.4 million against, and some abstentions, plus broker non-votes, which just means brokers didn't vote on behalf of some shareholders. If you look at Lori Havernack, the vote was overwhelmingly for, with over 160 million votes. Only a little over 500,000 voted against. It is clear she is a very popular person. Most of the other nominees also had strong support, meaning shareholders were mostly on board with the company's picks. Next, there was a vote on executive compensation. This is where shareholders get to voice their opinion on whether the company's top dogs are being paid fairly. In this case, it was an advisory vote, meaning the board isn't obligated to follow it, but it's still a good temperature check. About 42 million votes were in favor of how the executives are being paid, while around 19 million voted against. It is clear the vast majority of voters approve. Finally, shareholders ratified the appointment of PricewaterhouseCoopers L as the company's independent auditor for 2025. Auditors are super important because they check the company's financial statements to make sure everything is accurate and above board. The vote was a landslide with over 154 million votes in favor. Moving on, let's talk about Kentucky. Kentucky American Water, which is owned entirely by American Water, has asked the Kentucky Public Service Commission, or KPSC, to increase its water rates. They're looking for an extra $26.9 million in revenue each year, not counting infrastructure surcharges, which are an additional $9.9 million. Kentucky American Water plans to put these new rates into effect on a temporary basis sometime around December, but the final rates need to be approved and any overcharges during the wait might have to be refunded to customers. This rate increase request is based on a few things. First, they want a return on equity of 10.75%. Return on equity is basically how much profit they make on the money invested in the company. Their financial structure has 52.26% equity and 40-26. These investments are probably for improving water infrastructure like pipes and treatment plants. The KPSC needs to approve all this and they're expected to finish their review by the end of the first quarter of 2026. There is also a press release that Kentucky American Water put out. It basically says what we have already covered, that they are requesting to raise rates. Now, before we wrap up, let's take a look at the fine print, specifically the cautionary statement about forward-looking statements. This part is where the company reminds everyone that they can't predict the future with 100% certainty, and things might not go as planned. They mention a bunch of factors that could affect their results, including regulatory approvals, legislative actions, and economic conditions. They also refer to their annual report for a more detailed discussion of these risks. So what's the story here? Well, American Water had a pretty standard annual meeting. The shareholders mostly agreed with everything, showing confidence in the board and executive compensation. The Kentucky rate request is more interesting. It's a move to get more revenue to cover big investments in infrastructure, but it depends on regulatory approval, so it is not guaranteed. American Water seems to be playing it safe by reminding everyone that there are risks involved. This is standard practice, but it's a good reminder that even essential services like water can be affected by many things. Looking at the numbers, American Water is a stable company in a necessary industry. The Kentucky rate case is a good example of how they are investing in their business. It seems like they're in a good spot for long-term growth. The big risk is always regulatory. Alright, that's our breakdown of American Water's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.